Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about very interesting topic, which is Japanese yen. Japanese yen and the volatility of the Japanese yen. Now, what do you mean by the volatility of the Japanese yen? As you very well understand that Japanese yen is moving towards lot of volatility. Central banks are unable to do anything, and Bank of Japan is out of ammunition. So, in that regards, and in the last 3 months, in the last 3 months, in the last 3 months, Japanese yen has been touched less than 90 figure, which is a little concern here, because concern is that if the Japanese yen will get down, then of course the impact would surely be on the global economy. But nonetheless, as you very well understand that the Central Bank of Japan is left with almost no firepower, so they are not been able to do anything different this time. So the purpose of this video, the chart which you're looking here on your screen right now, is to tell you that exactly what is the movement in the Japanese yen, and to compare the same movement with the one of the leading technical analysis benchmarks, which is known as yours RSI, which is Relative Strength Index. But before initiating this video, I would like to tell you few important things to consider. That Japanese yen is now gone. Gone in the sense, like, we understand that from the last 2 decades, Japanese are trying to do a huge amount of quantitative easing, but unfortunately they are not been able to get a success what ideally they should get. The reason is very simple, because they wanted to revive their economy only via quantitative easing, and this is something which is really not possible nowadays. In the sense, like, you cannot revive your economy only on the base of the interest rate. You need to work other factors also. Yes, at the same time we should appreciate the fact that Japanese, like Central Bank of China, which is People Bank of China, also doing a lot of interventions in the market, but that doesn't mean that they are doing heavily quantitative easing in the market. Yes, as we understand that China is the second largest economy of the world, they are doing a lot of quantitative easing, a lot of intervention in the market, which is part and parcel of the game. Because from effective 1st of October, which is not very far, their currency is coming out to be in the system. Their currency is coming out to join the SDR. So here we took our terminal, and we are going to show you something, the volatility in the Japanese yen. So what we are going to show you, that you can very well see that this is a 10-year chart. First of all, let me clarify to you that this is a 10-year chart. This is not a 1-year chart or a 3-month chart or the 5-month chart or the 6-month chart. This is a 10-year chart. What do you mean by 10-year? Because we wanted to show you a long-term picture of Japanese yen. Now, if you carefully see here, then you will get to know that this chart starts from 2006 here. You can see it here, and these charts end up in 2016, and this is a live chart. Now you can see in 2006, 2017 and all. In 2006, and this is a Japanese candlestick chart. Now I hope you understand what do you mean by Japanese candlestick. By Japanese candlestick, if it is green, then it is going up, and if it is not going green, it is a red, then it is going down, which is very visible. And I hope video is also picking up that. Now here, if you carefully see, if you look at here, now I'm pointing my mouse here, like 1, 2, 3, 4. These all are multiple crores. It means they are increasing. There is some drift which is coming up. Now they are taking the things up. If we come here again, then we will get to know here. You will get to know the drift is further coming up. So that way. And if you look here, then all red. Nowadays Japanese yen is in a mess. There is no doubt about that. So by 2006, Japanese yen were at approximately, if I say, roughly 117 kind. You can see it here. Now let me show to you. Here we go. Roughly 117, 118. And now if you look, the price is very well known, which is 100.43. I will never consider this as 100.43. I will always consider this as less than 100, because of course if you are at 100.43, it means you are less than 100. Now what we are trying to show this chart via our terminal is that how the volatility in the Japanese yen is happening. You can very well see that the curve which is next to you is extremely volatile in nature. What do you mean by volatile? You can very well see it is extremely mean reverting in nature. Now what do you mean by mean reverting? You know, it starts here, then it went down here, then it go up, then it again went down here, then it again get down here, and like this. Now Japanese yen is getting highly volatile. Now highly volatile in the sense, like, you very well understand that Japan is an American ally, and if dollar will get down, then Japanese yen will also get down, except four currencies, which is GBP dollar, Aussie dollar, New Zealand dollar, and fourth one is GBP dollar, Aussie dollar, New Zealand dollar, and Euro dollar. These four are acting as a direct pair, although there is no confirmed definition of a direct pair we have across the globe. If we carefully look at the walls of Japanese, then we will get to know that this is the trading volume of Japanese. But let us make life little critical, in the sense, like, since this is a live terminal of ours. Now you can very well see that this is a monthly chart. Now we will make it tick by tick. Now see this tick by tick chart. Tick by tick stands for second by second. You can very well see that the how volatile or how mean reverting the Japanese yen is. Like, it is going up, going down, going up, going down, how mean reverting it is. And currently it is 100.46. There is a lot of probability which is there in the global marketplace, and a lot of traders which are coming up and saying that the Japanese yen will go to probably 95, and if this would happen, then this is not a good for exporters, because if I am exporter and exporting in dollar and Japanese yen will go to 95, this is of course not good for me. But at the same time, if it will go to say 120, 130, then this is good for me. But again, something which is not good for exporter, this is of course good for importer, because for importer this is extremely good, which is extremely good because he would import in a cheaper sense. He would import in a cheaper sense. And one thing which we certainly need to understand is this, which we are telling. Just a minute, let me look at the chart again and tell you about this. Yes, so here we move from tick to say daily. It's all up. You can very well see the volatility. It is daily from the last. It is daily of last 10 years. So if a day is of 365, then there is a convention in the foreign exchange market. Then this day means that out of this day, the market trades only 182 days. So if market trades only 182 days, this effectively means that this trade is having 182 into 10, which is roughly 1800 days, which we are talking about, right? And suppose we make this chart weekly, then again you will get the same. And suppose you will make this chart monthly, so 1 year, 12 month, 12 into 10, 120. The chart would look little nice, as we very well understand. Now we have compared this chart with one of the techniques in technical analysis, which is known as RSI. RSI stands for Relative Strength Index. We know that it varies between 30 to 70, although you can change the 30 to 70 to any digit. Like, take an example, like I have taken the 14 digit 14 days RSI. I wanted to change this to 72, say. Now upper level is 70. Before changing, let me explain to you. Upper level is 70 and lower level is 30, and it means overbought and oversold. If it is going to cross 70, it means it is overbought. Then you should if it is cross 70, it means this is oversold, then you should buy. And if it is cross 30, it means overbought, then you should sell. Now I will say, since but before moving ahead, let me make this little daily, because 180 days in a year into 1800, right? I think this looks good. So what we are going to do, we are going to make this little change here. We are going to make this to, because we are talking about 180 days, so we can make this average 100. Okay, and 70-30, let us continue for a while and put enter. enter. Now you can very well see that it would change. Now I'll show you how RSI works. Now this is a line. You can see this line. This line is, if this line is if you are crossing this line, it means it means you need to buy. Now see here, if you compare this, then you can see that it is overall rising. It is overall rising like this. It is rising, so you need to buy. And suppose now let us show you here also. If this is here, then you can see it is rising. And suppose you come to here, now you can see that it is in the domain, it is less than the line. It effectively means that it should be selling. So this is what Japanese yen is all about, and the purpose of the chart is to show you very clearly that markets are getting very volatile and we need to be very careful about Japanese yen. Of course, I very well understand that market can take place any moment, and sitting today, markets are very aggressive in nature, and I sincerely don't think that sitting today Japanese yen left with any strength, to be very honest, to able to tackle huge volatility in the exchange rate. And if you look at the chart carefully again, you can very well see that the RSI is telling that whether you need to sell or you need to buy. If you look carefully, that we are making a lot of sense that now it is falling. It is falling mean that we should sell yen, and considering the fact that Bank of Japan is having left with almost little firepower, they have no firepower right now left, so they cannot do anything, and things maybe go here and there. So there is a big probability that you need to sell. And if you carefully see here also, which is RSI, which is very well visible in the video also, that it is less than the chart, which suggests that you should sell. So effectively, Treasury Consulting LLP is advising very well to all of you to sell the exchange rate pairs, and basically Japanese yen. But at the same time, we are also advising you to please be careful because market volatility can take Japanese yen anyway. But since we understand that Japanese yen is almost done in the sense like they already have a negative interest rate, and I strongly doubt that they are able to perform well today, because the negative interest rate policy they already did. Now they cannot do anything about the Japanese. They cannot do with the negative interest rate policy max to max, but they can do. They're going to increase the quantitative easing program, which they are doing very well, which they are trying to do, but I strongly doubt that this would yield a benefit for them. So in that regards, I hope from this chart you will make sense that Japanese yen is heading towards a little disaster. That disaster we need to check, and we need to be very cautious about that rather than going blindly in the Japanese yen. Japanese yen is a sell call, and we should treat this as a sell call. So we thank you very much for that, and I hope you like this video. One or two videos are also on the way, wherein we would be covering some other examples like Aussie dollar, GBP and all. So we thank you very much, and you understand the contact details of Treasury Consulting LLP. This is Treasury Consulting LLP @gmail.com, and our alternate is Rahul Magan @gmail.com. My contact number is very simple: 919899242978. Thank you very much, and have a great enjoyment. Have a great weekend. Thank you.